Hi everyone, let's go over my bullish and bearish Elliott Wave scenarios on Bitcoin, starting with the low time frame impulsive scenario where we are looking for a 5-wave structure to the upside, where after wave 5 we are then looking for a bigger retracement to the downside. Towards the upside, we still have some interesting resistance areas that are not yet touched, as currently this high over here did not hit any of my target boxes, which is interesting as I do like bigger pivot points and turnaround points to hit my target boxes, as these are important support resistance areas on the chart. So for me, this automatically increases probabilities. We still have some more upside to go, but that's also the same from an Elliott Wave point of view, as I'll explain in a second. Now the golden target box here is between 45 to 46k as resistance. Then we have blue 47.2 to 47.5k. Those are the two above price at the moment. But in this Elliott Wave scenario, in this impulsive structure, we are looking for that wave 3 to end. If we look at the volume, then so far price has been moving towards the upside with volume increasing. So preferably before this yellow wave 3 is finishing, we get a wave 4, a wave 5 on a lower degree, and then a new high made on lower volume. As long as price is creating higher highs and volume is increasing, these peaks over here, then we are still looking for this wave 3 to move to higher highs as well. At the moment, we do have resistance at the 2.618, which is also what we like to see. It's an important target for wave 3. If we can pass the 2.618, we're going to be looking for the 3 and then eventually the 3.618. Now, when we look for wave 4s, it is not uncommon to, after hitting the 2.618, retest the 2, which is sitting at 42.3k. So that is an extra level to keep in mind just in case. However, not really yet looking for this wave 4. Based on the volume as well, as just explained. But what is important to let you guys know is that now the 0.236 has at least been hit. So there is the probability, there is that small probability that the price action we have here might fit with a potential wave 4 in yellow and then a wave 5 up. However, currently for me, this range here is too small in time. What I prefer to see is the wave 4 that we are then generating here in yellow is going to be around the same amount of time as this wave 2, if not longer. And if I take a fib time from the high of 1 to the low of wave 2 here till the end of wave 2 to the current high that we have over here, then you can see that currently price did not even reach the 1-to-1, meaning this range we have so far is shorter in time than wave 2. It's not impossible for a wave 4, it's just less common. So what I prefer to see is wave 4 to be longer, and it's important to know we did hit the 236. But as you can also see, the 0.5 to the 382 still a common target for wave 4, all the way down to 40.8k with the invalidation at the 618, 39.9k. Now in confluence with the 382 is this range over here, which is structural support. So if price would move to the downside, this range is going to be important. And also the most common target for a wave 4 between the 05 to the 236 area is that 382 to the 05 area. So that's something to keep in mind. However, preferably, as mentioned, wave 3 is not yet in, and we are still looking for this impulsive structure over here, where we're looking for a 1, 2, maybe 3 is in, then a wave 4, and eventually a wave 5 of a lower degree, which then results, after this wave 5 is in the high of wave 3 being in. And then we're looking for yellow 4 and yellow 5 to the upside. Now in this scenario in white here, 1, 2, 3, eventually maybe already in, looking for 4. This is your wave 4 target area, taken from the low of 2 to the high we have at the moment. Target area can be seen between 43.2k and 41.2k, which also includes this range once again. And the 0.618 is the invalidation for continuation to the upside, which is then 40.3k. Or if price would move to 40.3k, we might have to think about the yellow wave 4 over here, where the 05 is at 40.8, so 40.3 is still quite low, but the invalidation is a bit lower. If price would do this, then the impulse would indeed be invalidated. You don't want to see that for a wave 4. We have to look for other scenarios, but that's not the moment, not relevant at the moment. If you then zoom into the local most bearish scenario here, then there is the potential for a double 1-2 that I have on my chart. But what you also read over here, or maybe get, is that the probabilities are not too high for a double 1-2 or a bigger impulse to the downside at the moment, right? In yellow, we have the higher degree impulse 1, 2, then we're looking for 3, 4, 5. Inside wave 3, we are then looking for the white 1, 2, and eventually 3, 4, 5 to finish yellow 3. The problem here at the moment is that even if one would be able to counter wave 1 here, and this would be your wave 2 retracement to the upside over here, then this has to be another wave 1, another 2, and then you're going to be looking for a 3 to the downside. But your wave 2 here then retraced to the 886, which is a rare target for a wave 2, not a common target. So that's not actually something that we like to see. Besides, also preferably here, we would have liked to see another 4 or 5 on, once again, lower volume, because if this would be another 1 to the downside, well, a wave 1 also has to have 5 individual waves, 1, 2, 3, 4, 5, where preferably a wave 1 then doesn't end on high volume. You get another wave 4 correction, wave 5 on lower volume, but that's not what we got. If we would move this wave 2 to the right and leave wave 1 where it is, then the structure of this wave 2 is incredibly weird, right? You have to think about a flat structure or a WXY structure, but it doesn't really work. This is a very deep retracement if you take a fib from this low to the high for even a flat. So this also does not have high probabilities at the moment. And if you would move this wave 1 to the right here as well, then your wave 1 is going to be very awkward. And even if you move your wave 2 to the right here as well, and that's your 1, 2, and this is another 1, 2, then wave 2 again hit the 886, which is not a common target again for a wave 2. So that lowers the probabilities for this scenario at the moment, which therefore still increases the probabilities that everything happening here is a wave 4 or is corrective price action. Now, when we look towards the upside, however, this being the end of the range and looking for a new impulse to the upside is also already invalidated, because what we are looking for here from this low was a potential impulse and then a wave 1, 2, another 1, 2, and then we're looking for a wave 3. Now preferably in a double 1, 2 setup, what we see is a diagonal and then a 1, 2, 1, 2, 1, 2, and then lift off, where the second wave 1 takes the high of the first wave 1, which was not the case over here. But mainly what's important was this move to the downside, because now the 886 has been hit. But before the 886 is hit, your invalidation for a wave 4 is the 0.618. If we're looking for a 1, 2, 3, we eventually look for a 4 and another 5 to the upside, again on higher volume. Keep an eye on the volume, right? The volume is in the high, so we want to see another 4, another 5 as a minimum. However, if we're looking for a 4, it retraced too deep, right? It hit the 88 or the 0.618, which is an invalidation for a wave 4. It went all the way down to the 886 that you take from the low of 2 to the high of 3. So an impulse here from the low is invalidated. And this increases the probabilities that we are not yet finished with then a potential wave 4 on the low time frame, like the scenarios or the micro that I just showed you, right? Which is the white target box over here, or potentially even the yellow box. Now it is important to also note, by the way, for this white potential wave 4, the 236 has been hit, but you can see the target box was all the way down to 41.2k. Now if we quickly go to the Bybit chart, which is another chart, and I only want to show you the Bybit chart because my chart has this big wick, and for once Bybit does actually not have a big wick. I like to show you that potentially there is a 3-wave structure finished. So while my chart is loading as I'm recording this video here, you can see a trend-based fib extension taken from this high to this low here to that high does give us this target area, which has been hit and which has been respected. So arguably, without knowing the exact count, it can be an ABC over here, for example. Wave Cs do like to end on high volume, so that's no problem. But we arguably potentially do have a structure that is finished over here at this low, while we are looking for a continuation of the range, or for a deeper wave 4, we can of course be looking for price to hit this range. But at least important to know we did hit that target area, which is both the target area for a wave C as well as for a wave Y. So if you then go back to my other chart, right, and then finally look at the, there we go, confluences over here, then I spoke about the 30-minute gap. Now I did have a problem with how price came down. It closed below the 30-minute gap. On the 1 hour, the gap is respected, right? We got a wick, bit of a retracement, move up. But this is already not really what you like to see when you think about a gap. This was the gap over here. Preferably we test it, don't close inside but then move up, but we closed inside, increasing the probabilities to fill the gap and therefore potentially moving then to this range over here, continuing a wave 4. We do have some bullish CVD divergences though with this low, higher low in price, lower low on the CVD, but what I like to see is local strength. I want to see CVD divergences here, bullish or bearish. Now at the moment, because this is not an impulsive structure, we have to keep in mind any bullish CVD divergences might potentially be leading, but at the moment over here, there are no bullish nor bearish CVD divergences locally over here. So we have to keep an eye on what CVD is doing, because this bullish CVD divergence, even though we have it, is not going to be the one that I'm really going to focus on. But I do think, in a bullish environment, it is important to keep an eye on these divergences at least, because in a bullish trend, you can have potential setups with these CVD divergences. Higher low in price, but look on blue, lower low on the CVD, right? So that's a good one, which increases probabilities to take this high. And that's exactly what we're looking for, as we are looking for a wave 4 structure, and then a continuation to the upside in a wave 5. Now the invalidation would be price taking this low, but we're still far away, of course, from that low. So if we then look at the probabilities of these different scenarios, then on the medium time frame, low time frame, even on the micro, really, we're of course still looking for this high to be taken and look for higher prices. On the micro, however, because an impulse locally is invalidated and has low probabilities, for me, the probabilities are highest locally here from an Elliott Wave point of view, to continue the range, right? Continue the range over here in a wave 4, whatever structure might form, triangles, flats, doesn't really matter. Maybe we go down a bit, we go up a bit, we have structural support, but with the bullish CVD divergence we have over here, which is still important, especially in a trending environment, the price action we see so far, which does not look impulsive to the downside because of the double 1-2, which doesn't really work nicely, it's still a higher probability we are going to see higher prices on Bitcoin after a wave 4 is then in. I hope this video was helpful or valuable to you. Please check out the most recent educational video I've made about the best trading indicator you can use in my opinion. And for now, thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.